Imagine waking up in a world where buying a new smartphone requires a credit check usually reserved for a mortgage, and your electric bill has doubled not because of the grid, but because the solar panels on your roof are suddenly worth their weight in platinum. It sounds like dystopian fiction, but the mechanism for this economic nightmare is already grinding into gear, fueled by a shiny metal we've all taken for granted. Today we're going to dissect how the skyrocketing price of silver isn't just a win for stackers, but a potential wrecking ball for the global transition to green energy and the digital economy. We like to think of silver as the poor man's gold, a cute little hedge against inflation that sits in a safe. But the global economy treats it like oxygen. It is actually the most conductive metal on Earth, which means our entire digital existence is handcuffed to it. In 2024, the market reality hit us hard. Industrial uses now account for roughly 55% of total silver demand. That is not people buying jewelry. That is the bare minimum requirement to keep the lights on and the data flowing. We are talking about a staggering 508.6 million ounces of demand, coming purely from industrial sectors in recent estimates. When you realize that nearly half the silver dug out of the ground, specifically 48% by some metrics, is vanishing into factories, you start to see the problem. We built a technological civilization on a finite resource, assuming it would always be cheap. But what happens when the factory needs more than the mine can give? We are seeing increased industrial demand create physical deficits that can't be solved by printing paper money. Do you really think tech giants are ready for a bidding war over raw materials? Because when 55% of the market is non-negotiable industrial need, price elasticity goes out the window. The supply chain is tightening, and the margin for error is effectively zero. If industrial demand is a fire, the green energy transition is the gasoline we are pouring on top of it. We all want to save the planet, but apparently, nobody did the math on how much silver that actually takes. Solar technologies alone have exploded in consumption, now accounting for nearly 20% of total industrial silver demand. It is becoming a black hole for the white metal, sucking in supply faster than we can refine it. In fact, photovoltaic installations now consume approximately 15% of the entire annual global silver supply. Think about that. 15% of everything miners bleed to produce is just sitting on rooftops. We were told the green revolution would be difficult, but nobody mentioned it would require strip mining the earth to depletion. As governments mandate more green infrastructure, that 20% figure isn't going down. It's going vertical. We are practically paving the planet in silver paste. Does it seem sustainable to you? Because if we hit a shortage, the Green New Deal becomes the green too expensive deal very quickly. We are trading a carbon crisis for a mineral crisis. Here is the cosmic joke. The technology is getting cheaper, which only makes us addicted to using more of it. By 2024, the global weighted average cost for utility-scale solar PV stabilized at just 0.043 United States dollars per kilowatt-hour. That makes it a staggering 41% cheaper than the least cost fossil fuel-fired alternatives. Because it's so cheap, we stop building coal plants and start building solar arrays by the gigawatt, which drastically increases the physical demand for silver. It is the classic Jevons paradox. Efficiency leads to higher consumption, not less. Furthermore, commercial solar module efficiency increased from 22.3% in 2023 to 22.7% in 2024. We are making better panels that generate cheaper power, incentivizing the entire world to upgrade simultaneously. But every single one of those efficient, cheap panels needs silver contacts to function. We have successfully made the energy cheap by making the hardware essential. We locked ourselves into a silver-dependent future because the electricity is 41% cheaper than gas. Hope you like paying premiums on the hardware side. But wait, it gets worse, because the sun doesn't shine at night, and we need somewhere to put all that power. Enter the battery revolution, another silver-hungry beast disguised as a savior. Battery storage costs have absolutely collapsed, declining by 93% from 2010 to 2024. We went from paying $2 571 per kilowatt-hour to just 192 United States dollars per kilowatt-hour. That price crash is the only reason EVs and grid storage are even viable today. But just like solar, this 93% drop in cost has triggered a massive explosion in volume demand. We are building batteries the size of city blocks. While batteries use less silver than panels, the control systems and increasing complexity of the grid infrastructure require massive amounts of conductive material. We are forecasting capacity additions that significantly exceeded initial market expectations in 2023. We are building a global machine that runs on cheap batteries and cheap solar, both of which are financially viable only if raw material costs stay low. If silver rips higher, does that 192 United States dollars per kilowatt-hour price tag hold? Or does the entire economic model of the battery sector implode? You might be thinking, hey, chill historian, why don't they just dig more holes? Well, they are trying, but it's barely making a dent. Look at America's gold and silver. They achieved a massive 36% year-over-year increase in silver production. That is a heroic effort, but in the grand scheme of global demand, it's a drop in the ocean. Silvercorp Metals is doing fine, reporting adjusted net income of $21 million and operating cash flow of $48.3 million in Q1 alone. They are profitable, sure, but are they scaling fast enough to meet a 20% industrial demand spike? History shows us that mines take years, sometimes decades, to come online. You can't just flip a switch because the price of solar panels went up. Even with a 36% production boost from one company, the aggregate global supply is sluggish. The easy silver has already been mined, folks. We are digging deeper for lower grades, while the market screams for more. It is a bottleneck that no amount of operating cash flow can instantly solve. We are entering a phase where financial speculation clashes with physical reality. Despite the shortage, the silver rally this year hasn't even shown its true fundamental power yet. In 2024, we saw increased industrial demand help create physical deficits, yet the price hasn't gone parabolic. Yet. The market is sleeping on the fact that 48% to 55% of demand is inelastic. When the physical shortage actually bites, it won't be a gradual rise. It will be a violent repricing. We have seen multiple producers reduce guidance in the past, tightening the screw further. The fundamentals are screaming shortage, while the paper markets are whispering stability. This disconnect is dangerous because it leads to complacency. When the industry realizes there isn't enough metal to meet that 508.6 million ounce industrial quota, panic buying sets in. And unlike gold, you can't just melt down grandma's necklace to build a solar farm. The industrial silver is consumed, gone, vanished from the stockpiles forever. Now we look at the immediate future, and the charts are starting to look terrifyingly bullish for the metal and bearish for the economy. Analysts are projecting silver's potential to outperform gold in 2025. That is a polite way of saying the industrial pressure cooker is about to blow the lid off. Usually, gold leads the way as the safe haven, but silver is the working man's metal, and the work isn't getting done without it. If silver outperforms gold, it means we aren't just dealing with monetary inflation. We are dealing with commodity scarcity. The last time silver went on a tear, it broke the backs of several industries. This time, the industries at risk are the ones meant to save the future. We are looking at a 2025 where the gold-silver ratio collapses, not because gold got cheap, but because silver became unobtainable. Imagine a world where the inputs for your tech and energy sectors rise 50% or 100% in a year. That isn't inflation. That is a supply shock that stops GDP in its tracks. So here is the endgame, and it is full of dark irony. The very success of the Green Revolution is what kills it. We achieved solar power at $0.043 per kWh and battery drops of 93% by ignoring the supply constraints of silver. If silver prices double or triple due to this scarcity, those cost savings vanish overnight. Solar projects get canceled. EV prices spike. The transition to a carbon-neutral economy hits a brick wall made of expensive metal. We are looking at a scenario where the global economy is held hostage by a 15% supply deficit in a niche metal market. It's not an asteroid or a war that stops progress. It's poor inventory management. The producers making $21 million in net income will be fine, but the consumer? You're going to pay for every ounce of that deficit. The economy can handle high oil prices. We are used to that, but an economy that runs on electronics cannot handle a silver squeeze. It's the Achilles heel of the 21st century. We have 55% of demand locked into industry, solar eating 15% of total supply, and a mining sector that can't dig fast enough despite 36% production bumps. 2025 isn't just another year for commodities. It's the year the physical reality check bounces the global checkbook. If you want to survive the repricing of the modern world, smash that subscribe button. We've got a lot more history to unravel.